Good morning, traders. My name is Brad Matheny. Today is February 4th, 2023. It's early in the morning in California, and I wanted to go over some very important structures for precious metals as we move into the next phase of what I believe will be a wind up to a very explosive parabolic top. Okay, we're going to start off with a very broad gold chart. So you can see I've got a very big gold chart here going all the way back to 1981 and carrying forward all the way until right now. I want you to pay attention to the cycle trends that are designated here with this green and red cycle phases. These are appreciation cycle phases in the stock market. These are depreciation cycle phases in the stock market. These are appreciation cycle phases in the stock market, and these are depreciation cycle phases in the stock market. Now, pay attention to what happened back here in the 80s and the 90s. What happened back here at the end of this depreciation cycle phase was, let me see if I can go back and get more data. Yep, there it is, right here. What happened during this? In fact, let me copy this and try to show you again. There we go. I'll draw a couple vertical lines right there, anywhere right there, and again right here. So what happened in this phase? Okay, why was this such an extended blow-off phase during this depreciation cycle phase? And why did we saw gold rally from 266 up here to 471? Almost literally 100% rally phase. And why was this so important to see this big blow-off? Is because we had the end of the gold standard take place in 1971, 73, whatever you want to call it. And then we had this big speculative bubble phase come up where gold went from $100 all the way up to $877. Huge rally phase. Kind of similar to what happened over here. But you can see how we based and bottomed across this level. So in theory, if we come over here and draw a horizontal line, you can see that we established very long-term support right across this level, even though we got below it back over here just briefly. Now we've come to the point where we've established, after this big rally phase, critical support over here, which is very similar to this phase. And in my interpretation, because we had seen this big rally phase and this big expansion of inflation in the mid-80s. We had gone through this phase here, and we had bounced out and then gone through the dot-com bubble down over in here. And then we rallied back out of it, finally settled back over here in the dot-com bubble phase where gold became really unattractive. And why was it unattractive? Everybody was making money in real estate. Everybody was making money in the dot-com bubble. Gold became second nature. Nobody really paid attention to gold as a safe haven hedge. Now we've gone through this extensive phase of the terror attacks in 2001, the global market crisis over here in 2008, and then the big blow-off phase. Why is gold now on everybody's radar? Because gold is going through a new resurgence in the midst of a decycle or deflationary price trend. So what happens here is we have this bottom right here at roughly 1,042, which should tell us that we are going to likely see some sort of a move up to, and you got to understand where these deflationary cycle phases are, where we're getting into this next appreciation cycle phase that's only going to last till about 2027, 2028. So let me draw a vertical line there. And this is where we're going to be right over in here. Let's go July, August, right there. And I'm going to make this kind of a bright pinkish color because this is a crisis cycle that's setting up, okay? We are at a point right now where gold is going to probably be in a mix of at least a minimum 100 to 200 point rally phase, 200% rally phase, possibly entering into an extended rally phase right here. Now, I've been telling everyone, if you listen to me and going back and watching my videos, I've been telling everyone that we're in this 2003 phase. We've come off of this bottom, we've rallied back up into this area, and we're kind of in this phase. So now, let me, just for the heck of it, let me show you what I believe is really taking place. So we've come off of this rally, and we are now in this phase. So this is kind of where we're at. We've come, think of it like this, okay? We've had our COVID crisis right here. We've come up, and let me just draw this, and I'll try to, this will give you a better understanding. So we've had our little COVID crisis. We've gone up and seen new highs. We've come down and unwound the new highs, which was a speculative bubble. We attempted to get back up to those highs, and then we stagnated into a flagging formation here that eventually broke to the upside, broke to new highs, stalled, and then this is a weekly chart. So about 2 months later, we finally rolled into this phase, which got us into an appreciation phase and cleared the actual rally. So understand that we have these highs kind of being our level here, and this is the, oh yeah, it started doing this where it won't let me edit anything. I just have to reload it, but I'm not going to do it now. So this is kind of the setup here, guys, right? So we had, you know, a rally phase off of this low. Then we had some crisis here in '02. And again, that's obviously a pullback, some sort of a little market pullback. That's what happens with gold, strength in the dollar, what have you. And then we rallied to these new highs. This was a good-sized rally. This was a, real quickly, this was a 29, almost 30% rally phase, right? Then we consolidated for almost a year and a half before we finally got out of the phase, retested our support, and then tried to rally up to the upside. So now, follow this as I crawl back over here to the right side, and then I'm going to do the same thing here. So we have our rally phase, our COVID crisis, our rally to a peak, then we consolidate, we attempt to get back up above it, then we consolidate, which should have been into some sort of a flagging formation, but this was a broad unwinding after COVID with all of the excesses. So can you call it a flag? I mean, in a way you could. You could come down and try to come across these levels and then potentially these levels and say, okay, here's a flag, a fairly broad flag, a kind of unique downward cycling flag. So when you count it, it would be, you know, up to here, finding support, up to here, and then we come back down to here, and now we get a breakout. In theory, what would happen for this breakout to be confirmed is we would actually see this coming off of these levels and potentially something like this. So if we were to look at this, and I would have to draw this as well because this is important across these lows. Potentially, yeah, I'll go off of these lows. So ideally we could see something kind of like this, coming up here, flagging out into here before some sort of a breakout, or potentially coming back down, retesting, and then some sort of a breakout. And the way that would work would be a 1, 2, 3, 4 potential 5, and that would have to assume some formation here off of this low starts moving up like this, almost a similarity to this one. But understand that we've got this same formation here, and I believe what's going to happen with gold over the next 12 to 24 months is that we are going to see gold roll up, try to break above these highs, and once it gets above these highs, we're going to see it stall out, come back down, and then begin to move higher. And that's the cycle phase that I believe is going to take place for gold. It's just like 2003 and 4. So let me come back over here. And again, show you what happened back here in 2003 and 4. So here's our setup. You had the rally phase prior to COVID. Here's our new highs. This is our 2000 roughly price high. Here's the consolidation. Here's the attempt to get above it. Here's our flagging, which at this point wasn't excessive because we didn't have a big speculative bubble taking place. We'd already unwound it. And now here's our flag. Here's our attempt at new highs. We break above it, we stall, and then we clear it. At that point, look at what happens. Okay, at that point, we start to see from these lows a very big increase, 50%, 150% in a downward cycle, 247%, and onward. Now understand that this goes really, really excessive. I mean, it is massive when you think about it. It is a 540% rally phase potentially in gold from these levels that I'm marking here in 2003, 2004. If my analysis is correct and we get a 540% rally phase in gold from these levels, we will be looking at, oh, I can't even get there. It is really ungodly. 340% puts us at 7,300. So 540%, roughly right there, puts us at, right there, 10,000, 11,000, maybe 12,000. If my theory is correct. And that won't happen until 2028, 29, or 30, probably. So right now we're in that early phase congestion. So I want you to think about it from a standpoint of this, without trying to destroy my chart here. We are right here, and technically we are right about here, right in this area, attempting to get back up above this level where we're going to stall, and where we are going to see some consolidation right in this area. So if I were to tell you where we are right now, we are really probably right in this area. And that means that we are going to stall and consolidate possibly within a maybe 11, 12, 15% range on gold, maybe. And then we are going to attempt to just melt upward, stall back out, possibly at about a maybe 15, 20% increase here. And then it could take as long as a year to clear to the upside. And then at this point, we start to get some real appreciation. It may only be 6, 7 months, but this is kind of what I expect gold to do. Coming up, maybe forming a double top, maybe forming some sort of a higher high, higher low type of situation. Eventually, yeah, we may see some sort of a roll down, a retest these levels, these high levels around 2000. But I believe gold's going to get up to 2250, 2350, stall, maybe pull back to 21, maybe a little bit lower. And then we're going to see this melt-up phase. And now kind of what's interesting about this melt-up phase, understand here, folks, that this melt-up phase eventually plays a pretty decent role in what we are expecting. And I will do from here as well. So from our high to our initial cycle phase, you need to kind of understand that these as Gann angles play a fairly important role as we go forward. So you can see we've got this angle, which ultimately came back up to our peak. Okay, very interesting, like I said. And then what we need to also pay attention to is these angles here eventually played right back out over here as angles of support. So let's take a look here at this slope. See what I did here. So this actually is a measurement of our function. So let's come from here to, well, let's go here. From this high to this high, and set that as orange. And then let's come back over here and have a little fun. All right, got well above it. Got well above it. I was trying to find something that would point to the peak level up here, and this obviously doesn't do it. This was my measurement of the rally phase. But again, we have a number of references to when we start getting into this parabolic phase. So again, we're right now at a very critical level. I believe we're going to see some rotation over here. Maybe a pullback down to 1800, maybe a pullback down to 1860. Then we are going to melt upward, attempt new highs up in the 2200 area, 2170, 2180 area, possibly stall back out before we get a bit higher, and that would put us at around 23, 2400. Then we start the next phase melt up. Okay, so now we come over here to the cash flow index. The cash flow index, which is a custom measurement of activity, how cash is being deployed in the market. We saw quite a bit of downward pressure, and remember, I had warned that we had seen this big rally phase, kind of like back over here, and we wouldn't be surprised to see some stalling like right here. We could see the market stall out over the next couple of weeks, and I've been warning of this. It's a good upward trend. We may see some consolidation through the end of February, leading to expectations of a Q1 data in March, end of March, April. So be cautious. This is not going to be a very, in my opinion, it's not going to be a very strong rally phase over the next 3-4 weeks. I think we're going to stall, and I'll show you more data as we go forward. I think we're going to stall out and kind of just melt upward at a slow boil, let's call it. The gold cycle index is showing still we're in an appreciation phase. We should be seeing this move up, but we're seeing consolidation down near these lows. This is very solid. This area here really is what's called an accumulation phase. We've seen gold prices move up like I just showed you on the chart. This is accumulation when we get down into this area. Understand that there's fear and that traders are attempting to accumulate gold and precious metals down in this area. This is real distribution coming down from a peak. Consolidating after a base and bottom here is real solid accumulation. Now, if we were to get down below this level, I would say, okay, we're distributing a bit, seeing people move away from gold. But at this point, I think the cycle is to the upside like I just showed you. Next, we have the fear index. So you can see the US SPY has moved higher. I've been calling for this for many, many months. You can see the sentiment index has stalled near the baseline area, the center standard deviation channel. I would expect it to stall out here, folks, not really moving aggressively higher here. You know, there's a lot of settling left to go in the markets before we see what's happening. And that's why I think gold has a very good opportunity to melt up to around 2100, 2180, maybe 2200 over the next 6 to 7 months. It's not going to be a big move up for gold. It's going to be a melt up to new highs, then a rollover, then a stall, and then some more appreciation. Eventually, in like 2025, 2026, we'll start to see some real big moves. Okay, the fear index has moved lower. That's great. We need the fear index to stay downward. We could see this roll into kind of a sideways flattening mode on the SPY, you know, staying above possibly 395, 385. But really, this has got we've had a big move here. I mean, you can almost see the waves. A, B, C, wave 1, wave 2 back down to the downside. Now we're looking at possibly an A, B, C, D, E type wave extending out. Maybe an ABC, maybe an ABCDE wave. This really gives us a good base. I would say that we're looking at moving up into like this area, 430, 440 on this next phase before we'll get another pullback. But I think we could have a very solid pullback here, maybe 6, 7, 10% on the SPY before we attempt to go higher. Okay, the real estate fear cycle. And this is really, I've been telling you, this is very hostile up here. You can see it is dropping back down very quickly. Okay, this is taking the pricing pressure off the market. We still need it to go quite a bit lower. I mean, it's got to get back down into these lower channels down here, 250 to 240, before we take quite a bit of pressure off the market. But it is moving downward. That means that we are starting to see weakness in the real estate market. We're starting to see the extreme hostile pressure that was in place just a couple months ago near the end of the year kind of weaken a bit. The Fed would likely keep things, where they're at or a little higher throughout 2023 and kind of push this pressure downward. But be aware we could end up getting some sort of a bursting real estate event over the next 12 to 24 months. So be very aware that this is pricing, U.S. home price index could roll down into the 330, 340 area on some bursting event. Next, we have the commodity gold index. We're at kind of highs here, folks. I don't see any reason why we're going to see this move quite a bit higher. Like, I don't think we're going to get up into this 3.5, 4 area here. I think we're going to roll over maybe at 2.2, 2.4, 2.5, roll back over into a sideways event. We could stay in this lower channel throughout most of 2023, which would mean a very mild melt up throughout most of 2023 for price trends, with some fairly deep corrections, maybe seeing some 10, 12% corrections in the process. So understand, I think we need to unwind further is the best way I would put it. Commodities have reached kind of a new peak here, kind of a little bit of a bubble here after the end of the year. I think the rest of this year is going to be a resettling event. So be aware that there's going to be opportunity, but it's not going to be the same opportunity we've seen back here in 2019, 2020, and 21. It is nowhere near the same market we saw over the last 5, 6, 7 years. Okay, custom metals trend index pulling back. It's very clear here. Again, you can see the channeling. Here's that pre-2003 peak. Here's our peak that happened after COVID. Here's our pullback. Here's our rally to a new high, which took place in 2022. Here's our recent pullback, and here's our attempt to rally back out of it. So in this channel, ladies and gentlemen, we have a new target up here around 14,400. We just need to wait out this pullback, which will probably hold up around this 50% area, 11,328. This is my custom metals trend index. Very helpful to understand what's going on in metals. And you can see the depreciation cycle phase here in metals, followed by the appreciation cycle phase. And now we're getting into this early stage parabolic cycle. So again, if I'm correct, and this is 2022, 23, 24 all over again, this is just the base that occurred way back over here in 2023 and 2024 before we rallied up here to these peaks. The next phase is going to be almost the same thing, but it's going to target, again, 12,000, 13,000 potentially for gold. Potentially. Okay. And of course the cycle phases. This is something I wanted to show you, how we have these expansionary cycle phases. Like I mentioned, I think we're down in this area right now. I think that really, if you think about it, we're at this sideways consolidation, trying to break out of it. Maybe over here would be another good analogy, but understand that this gives us a good example of how this rally phase takes place. And if I'm right and we're rolling through this cycle phase and trying to roll higher, then, ladies and gentlemen, we have a huge 400 to 500 percentage point rally phase for gold setting up. This is the metals chart index, the custom metals chart index. This is the pullback that I was expecting. I actually expected it back over here. So we got a bit of a rally phase here back up to the lower channel here in yellow or gold. Now we've seen a fairly solid pullback. As long as the dollar continues to strengthen, which may be another week or so off of the strong economic data and the shifting into Q1 2023, we could see gold hold up over in this area. So maybe another 3 or 4 or 5% downward before we find support. I mean, we do have pretty solid support kind of where it's at right now. But, you know, it could come back down and touch this area, this flagging apex, which is right here or right over in this area. And I believe that's likely. This is just standard for gold. But you need to understand that the real reality here is we have an impulse wave up, a short corrective wave down, followed by a wave 3 up. Now we could see a pullback down into this 410, 405 level, maybe 415. Then we start another wave back to the upside. And that's really what I'm looking at here. And lastly, I want to highlight the volatility index. This is my custom volatility index. I love this thing. It tells me what's going on. We've moved into a new cycle trend in this bullish trending. We've broken through this pink level and this red level. So we're at a point right now where we've exited this bearish cycle trend, but we are not out of the woods for a bullish trend yet. We will consolidate, trying to move into this channel. It's very similar to what happened back over here, although this is a bit higher on the scale here. But this looks very, very similar to kind of like right over here, where we got above a channel, we broke above our previous high. You can see here off of this low, hit an initial high, consolidated, broke above it, and then consolidated. So here we go, rally up, hit a new high, consolidated, broke above it, and then consolidated right over here into the end of 2020, which was an election year, by the way. But I want you to be aware, I think we could be into this type of a phase, which could mean that we're not going to see any real rally attempt until maybe April, May, June, maybe. And that means that the markets are going to consolidate. That means that gold is going to consolidate, maybe attempt to melt upward another 7 or 10%, and then go from there. Okay, so understand that we are in a predicament right now where gold will slide sideways. Let me try to come over here and clear all of these, and just real quickly try to give you a much clearer advantage or interpretation of what's going to take place. So here's our drawing, and here's our rally phase, our post-COVID move, our rally phase up here, our initial contraction, our reversion attempt to new highs, our extended contraction through the 2022 pullback, which essentially sets up a double bottom, even though it's not a perfect double bottom. And now what I believe is going to happen is we're going to rally up, consolidate back into this area here, move back up into a potential momentum phase, possibly getting into new highs before the end of this year, maybe in early 2024, and then consolidate and continue to move higher. We're not going to get into a parabolic move in gold until possibly the end or near the end of 2024, maybe into 2025, 2026. It's going to be a good solid melt up though. So from current levels, you're going to be expecting maybe 16 to 20% rally phase from these current levels here. Let me grab that little line right here. So maybe up into this fair area, 2280, so about 21%, 21 to 25% upside move for gold over the next 12 to 24 months. Nothing major. Then it will start to move into a parabolic cycle, which will then send us from the 2400 up into the 3600 area, which will be up here, probably 35 to 3600 area. Then the next move will be even greater, and that's going to be 2025, 26. And then, like I said, here's our start of our crisis phase. This is where things start to get really wonky. This is where I think the markets are really going to start to unwind, and we'll see a real parabolic move to the upside. So I hope this helps. Again, if you're buying gold and stacking and silver, be prepared. It's going to be a good year. It's going to be a great time for you to continue to load up, but it's not going to be a stellar year. It's not going to be that big, crazy blowout like everybody says. Okay? Follow me on Twitter. Follow me on YouTube. Let me try to remind you here. This is not what I wanted. There you go. So follow me on my website, MENT.com. come take a look at what I do. I'm really here to help you. I'm charging a very nominal amount. I want to try to build a subscription service so I can offset some of the ongoing time and costs that I put in here. I'm charging $54.99 a month or $4.99 a year. You get access to everything through my Essential Growth service. My Essential Growth service is the single subscription that gives you everything. You get all of my analysis in one location, and you get everything you need to know to keep you invested, including the MENT rotational modeling system, which is just fantastic right now. It is doing incredible with regards to trading the markets. Take a look at this. I mean, this is, as an investment strategy, just beautiful, absolutely beautiful. So many other people are out there trying to show you how to take a look at this, but if you pay attention to them, you'll notice that there's periods of 20, 25, 30% drawdown. What you're looking for here is a very consistent system that keeps you on the right side of market trends and protects your capital. This is it, everybody. And then beyond that, we have incredible trading strategies, real estate market analysis, and more. Inside of the Essential Growth strategy, you get pretty much everything you need to make your own decisions, and that's what I'm trying to do. I'm trying to teach you to make your own decisions. Yeah, I will guide you. I will give you information. I will give you my interpretation, but I want you to make your own decisions and go from there. All right, remember, guys, go to MENT.com, learn about what I do, learn about my history, learn about how I do the research, you make all the decisions, and what I'm trying to do is give you all the tools you need to become an efficient and successful trader, not just for today or tomorrow or next week, but for the rest of your life. I want you to be able to come to me, to rely on my research, to rely on my analysis, and learn to manage your money efficiently for the next 10, 15, 20 years. All right, guys. Thanks a lot. Talk to you soon.